Like, what about, let's say, a person who is willing to take that risk? What should be, let's say, a perfect recipe of becoming a successful investor, and so that even after they go through this phase, they are able to come out stronger?
So everybody will go through that phase. The best people
Yeah.
get it wrong. But
Yeah.
if your basics are correct, Akash, and it's an easier thing to say and difficult thing to do, but investing is as much art as is science. So you got to master both in order to be successful. So the science part is well documented. I mean, there is enough information available now. You can learn how to read balance sheets, etc., to
Yeah.
ensure that you don't have time bombs in your portfolio. But having said that, while the science part is done, and that is so important, the art of when is it that the cycle in some stocks is turning, and mostly stocks are cyclical. There are very few which are very structural movers in life. Mostly stocks go through cycles. It'll do you tremendous harm if you bought a really high quality stock at the peak of the cycle, right? Because then your returns might not happen, even though the company is brilliant for a number of years. It's happened to Infosys, it's happened to HUL,
Yeah.
happened to many other firms, right? So you want to be careful of that as well. But I mean, just the basics of ensuring that don't look at just the PE multiple and say that, okay, if the PE is good, then everything is okay. I mean, it's the easiest available form of ratios, and therefore even we financial commentators, when we talk to companies, talk about PE all the time. But the more difficult work, you look at the cash flows, you look at the balance sheet, all of those things are just so important in order to get the art correct.